You should use a prop firm, and I'm going to tell you why. And I'm also going to tell you some things to look out for. All information in this video is for educational purposes only. It does not offer a recommendation to trade future stocks, options, or Forex. All right. What are prop firms? This word gets thrown around a lot in the current trading world and Twitter sphere, I guess the X sphere, prop firms. So I think a better word for it is funding programs. There are prop firms that have offices such as S&B Capital, and there's plenty of them throughout the country. But in this context, in what I'd say 99% of people online talking about prop firms are, it's really like a funding program. If you prove you can trade, you get capital. It's often simulation capital. Nonetheless, and that's just their business model, how it plays out for them. Nonetheless, you do get paid out. I've been paid out from numerous prop firms. And we'll keep talking about these. You ultimately it's a paid to play. It's very lucrative if you're a good trader to manage risk. What do I mean by paid to play? It costs you money to go through an evaluation. And often you may get a refund on the cost of the evaluation. It depends. You may pay a monthly fee for accounts once you are proven. There's, of course, different structures for different prop firms. But ultimately, you're going to pay something up front to ultimately prove yourself and then receive capital from this prop firm or funding program. And how does it work? Like I said, you pay to play. You go through an evaluation period. Some of them are one phase. If you make X amount, you pass, and there's all sorts of drawdown guidelines there. At the most, I've seen 2 phases. In that case, I've often seen that the first phase is you got to make 8 to 10% gains on all sorts of different account sizes, and then the second phase is 5% or something smaller. Some of them have a total drawdown. So if you start with, let's say, a 100K account, a total drawdown could be just down to 90K, so 10% drawdown. And the daily drawdown might be 5K. It'll be smaller than the total, obviously. And some of them have a trailing drawdown. So if your 100K goes to 103K, so you made 3,000, it would no longer be a $90,000 total drawdown, but it would go up to 93. So your ultimately your account stop loss, I guess you could say, trails your total profit, which makes it harder. You don't get to get space from your drawdown. It just follows you until you pass. What are some benefits of prop firms? Again, I'm a big fan. I do think these are great if used correctly. So the obvious and big one is you're able to trade much more capital than your own bankroll. One note I would say, and I'm just here to keep it real, is the capital, your real capital, is your drawdown amount, not the account size. So if it says you have a 100K account, but if it goes down to 90K, you lose. Really, you only have 10K. You don't have 100K, you have 10K, which is still a good amount of money, and you probably paid less than $1,000 for it. So you're getting 10K, basically 90% off or more if you can prove you're a good trader and pass the stuff. So you get your capital is going to multiply by a lot for what you're paying if you're a good trader and can pass these things. Some of them have analytical tools to give you trading data. Because it obviously tracks your account to know where it is, and it'll give you your profit factor. And I've seen this is different across all sorts of prop firms. Some of them have it, some of them don't. Some of them are very detailed. Some of them just tell you your profit of the day and whatnot. But if you find one that does have these analytical tools, that's also a bonus. Also, it has access to many markets. You can trade futures or CFDs, both pretty highly levered products that will be like the ETF versions on leverage, if you're not familiar with futures. But like the S&P futures, it's just a levered product tied to the S&P. A lot of these prop firms will also have international markets, so there will be CFDs based off of the France 40, I believe it's called, French market, Chinese markets, all sorts of markets. They also have commodities that could be also through CFDs or through futures, but gold, silver, oil. It just depends. You're going to have to check with the prop firm you're with to see what products they offer, because it does differ. And most of them also offer Forex. So you have a huge universe of things that you can trade. And again, access to leverage. There is a lot of leverage in most of these products. So yeah, you have, like I said at the beginning, if you have a quote unquote 100K account with a 10K drawdown, it's a 10K account, really. But the size you can get with these products are surely over 100K. It depends on the leverage, but you can get well over 100K in size. That comes down to risk management. Obviously, the more leverage and risk you're taking, the more likely you are to blow up this account. But with the daily drawdown and some of the risk stuff, it does. If you know what you should risk per trade. So hopefully knowing what your drawdown is going to really help you be more disciplined and have risk management, especially once you're funded and you have an account, because then this can be extremely lucrative. You can make a lot of money. You can do it from your phone, and you have these products. You have money that's not yours. You have leverage. But ultimately, you've got to manage your risks so you have longevity and you continue to make money doing it. What are some downsides of prop firms? Spreads are sometimes slightly wider depending on the firm. I would say the ones with the CFDs have wider spreads than the ones that are trading futures markets. The futures, the spreads are typically how the live market is, but CFDs for the brokers to make money. Because a lot of them don't have commissions, some of these futures-based ones, you'll be paying a commission per trade, which I think allows the spread to be tighter. The CFDs, a lot of them don't have commission, so the spread is actually wider. Therefore, the market maker can make the money because this is all part of a business, right? And then decisions when choosing the firm. I don't know if I'd say it's exactly a downside, but it can be a bit overload. The space has become very saturated over the last few years, and there's plenty of good ones. There's tons of reviews. You can read Reddit, you can read Twitter, you can read Trustpilot, all sorts of stuff. Definitely do your due diligence. That's the last point, the due diligence. But I'll just basically getting paralysis by analysis, I guess. Of just like looking at all the firms, not knowing where to go. That can be a downside. It's a bit overwhelming. And then you may pay to play, but never get to play if you don't pass. So that's the downside. Again, you're paying a little relative to the amount of funding that you will get. So that is great and wonderful. And that's like one of the main good things, but also you could be paying, and if you have to make 8 to 10% and then possibly even more after that, it's not easy. So to pay to do that, if you don't get all the way through the challenges, then you have ultimately lost time and money. Hopefully you learned some things just trading through that, but you can pay and get nothing for it. And then you're not sure the actual health of the company, the prop firm, to do your due diligence. I was actually a part of a prop that I had been funded. I had actually been paid out. And then after a while, due to the regulations, it was a prop that was not in America, was not based in America. And the regulations of their country shut them down for whatever their securities laws and licenses was. And you could just never see that coming. I know another one last year. got in trouble for, I think, filling orders wrong. You just got to do your due diligence to make sure you're not dealing with some shady company. But that said, there's a lot more upside than downside, in my opinion. Just some overall, let's round up everything I've said. How prop firms are an incredible way to get access to significantly more capital with a relatively small price tag. You're going to get, if you pass, a lot more money than you paid, which is, who doesn't want that? Make sure you do your due diligence. Make sure you're being evaluated for a legitimate prop firm. Super important. And you're going to get access to highly levered products across many markets. Again, Forex, commodities, futures, CFDs, all sorts of stuff with leverage, which is wonderful. And then once you're funded, you need to maintain very strict, all caps strict, risk reward based on the type of drawdown. And so hope you learn something about prop firms, how they work, why you should think about using them, and hopefully can grow your own trading and trading accounts through these.